Hello, I'm Gareth Vaughan from interest.co.nz and I'm here today with another double shot interview where we interview a CEO or a politician or someone we think has an interesting story to tell. And today I've got Rob Alloway, the Managing Director of Allied Farmers with me, and he probably needs no introduction to most of our readers or viewers. Obviously a man who's been in the news a lot, pretty much on a daily basis for the last 6 months since his company bought the Hanover finance book and loans. Rob, obviously we sit here now 6 months down the track. You've had some big write-downs on that loan book. Any regrets on the deal and where things stand today?
Oh, look, no, not at all. I think we've really just started work. We've had 6 months of pretty hard grind, I think, going through that loan book again and meeting with borrowers and dealing with courts and lawyers, and no regrets. I think we've discovered a number of things since as well. So, yeah.
You've had a couple of announcements out in the last week or so. Conditional deal to sell Stage 2 of 5 Mile for something north of 23 million. Obviously, the Mark Cooper court case out of California as well, which is another 6 million, possibly more. Are these, or will these be the first cash returns you get out of Hanover? Oh
no, not at all. We've realised a few things since Christmas. We've sold I think just over 20 Jacks Point sections. You may well have read that we've realised some property in Australia as well in the Wauchope subdivision, which we also operate just out of Newcastle, and we've also reached a settlement on the Kinloch position, which we were quite happy to get ourselves out of as well. So there's been a few realisations.
What would they all add up to so far?
Oh, look, I think if we add up all the unconditional deals that have been done so far, it's probably in the $7 to $8 million region total. And then, of course, now with this judgment just adding to that. Look, we're quite happy with progress. I think a popular form of defence for borrowers at the moment is litigation. They think if they can tie you up in courts for a period of time that you'll either give up or you won't be around to fight them tomorrow, and that makes it particularly difficult. But look, we're not giving up. I actually did an add up yesterday on the number of cases and litigations that we've got going on at the moment, and I think I came to about 20 where we're running through the courts or we're waiting for our judgment to be released. So there's significant action going on. Yeah.
So you must have some pretty hefty lawyers' fees as well.
Look, we've moved to move a lot of our legal action in-house. You may well have noted we've appointed a top-flight general counsel who's coordinating a lot of that effort. And one thing I've learned is that you have to actually invest in professional services to actually get an outcome in a lot of cases, and we haven't been afraid to invest. If you have a look at the legal counsel that operated on this Cooper case, for instance, for us in the United States, he represents Elton John and Motley Crue and a number of US stars, a top-flight attorney, and he's done a sensational job for us. We're very, very happy with the outcome.
We often write stories about Allied Farmers, obviously, and we tend to get a lot of comments from readers. And there's been quite a bit of cynicism out there. I think one of the views that some of our readers hold is that Allied Farmers itself, prior to the Hanover deal, was in a pretty tight corner, and that perhaps you just did this deal so you could try and extract whatever cash you could out of Hanover, I guess to save your own skins, and that there probably wouldn't be much left for the Hanover debenture holders. How do you respond to that sort of point?
Look, I think both companies were in quite difficult positions leading up to when the deal was done, and I don't think that's any secret. However, it has left both entities a lot stronger than they were before, and time will illustrate that. I only have to go back to the deals and judgments that have been reached over the last week. We've made significant progress and we haven't salted away assets. There's been very little leakage in the portfolio. The assets are what they always were, and I think we've taken quite an honest approach to both valuing them and managing them to make sure that we get the best outcome for all investors.
So that cash that you've extracted thus far, the 7 or 8 million, what's that been applied to?
Look, obviously we do have operating costs as any business does, and these assets, a number of them, when we inherited them, they either had senior charges, senior debt against them that we've got to service, or there's restructuring associated with them. Some of it's been applied to debt reductions associated with those property assets, and some of it to operating costs. Yeah.
Yeah, you've got quite a bit of bank debt that's due in the next 6 to 12 months. How are you going about tackling that at the moment?
Look, we're negotiating with a number of funders at the moment, and it's probably a little bit too early to say how that's going to actually pan out. Yeah, obviously it's pretty hard to actually raise funds in this market and to actually keep banks happy. Nobody really wants to have senior banking facilities in place, and we're working pretty hard to reduce our facilities. So.
Okay, and so this is primarily your $19.5 million loan with Westpac that you...
Yeah, it's actually 18.5 as it stands at the moment as a senior debt facility.
Okay.
Then we carry a number of senior charges, first charges over property assets and things as well that we inherited from Hanover. Interestingly, a number of the assets that were pledged by the two shareholders to Hanover as part of that shareholder support package were already quite heavily geared. So debt was transferred into Hanover as part of that.
Okay. That was something you were aware of, though, at the time of the deal?
Yeah, we were aware of that, and they were all supported. Those properties were supported by valuations and things as well, and we considered at the time that the leverage ratios on them were appropriate. Yeah.
But this is an area that's obviously involving a fair bit of work and will require a fair bit of money to pay that debt down.
Restructuring and obviously active and aggressive sales of some of those assets. We really want to work through them and make sure we get best value out of them. Just valuing the time that we hold them for.
You've got your June 30 balance date rapidly approaching. Do you have a covenant test at that point?
Look, yeah, there are covenant tests and things, yeah. And at the moment, Westpac's been particularly supportive of us, I think, leading up to 30 June. Yeah.
You're comfortable that you'll meet the banking covenants?
Yeah, look, the hardest thing, obviously, on an assets to lending basis, it's quite straightforward. The biggest challenge for Alloway has been over the last couple of years is earnings. Obviously, the industry's been through quite a significant downturn with suppressed dairy payouts and things, and obviously cattle prices going down. Rural merchandising is just continually hard, and real estate sales have dried up, as you're well aware. On the finance side, I don't need to talk too much about finance. It's pretty hard to make a buck out of a finance company right now. So earnings has been a massive challenge. What I've been concentrating on over the last 6 months is focusing both those operating divisions, rural and finance, on some sound strategic plans going forward for the next 3 years. What are we going to do with the business in terms of configuring it so that it can operate in today's environment? Because the environment of 5 years ago doesn't apply anymore, particularly around finance. You know, I think sourcing funding for finance companies is going to become increasingly difficult, and profit margins are certainly being squeezed. So.
Yeah, I mean, obviously with Allied Nationwide, you're party to the government guarantee at the moment, Crown guarantee. That ends in October. You're not party to the extended one. How significant are your rollovers that are due in October? And I guess what are your long-term plans for getting, medium, short-term plans, even for getting capital into Allied Nationwide and for that business to raise funds in the future?
Look, as a parent company, we've always viewed Allied Nationwide as being a core part of the business, and the board has pledged support to that business ongoing. I don't think that view's changed. We are concentrating at the moment on, once again, configuring Allied Nationwide to operate outside the Crown Guarantee Scheme, and that means meeting obligations leading up to the expiry of the current scheme on the 12th of October. As far as rollovers are concerned, there's a significant number of rollovers that do